October 26th, 2023. We had another downtrend, pretty similar trades to yesterday in terms of gap down, sell off, pull back to the EMA, and then that was a pretty good trade for both days. Today was a little bit more of a broad channel because bulls made money. Yesterday it was hard for bulls to make money, but they did make money at lows and the first pullback. Here, bulls actually made better money. This was about 40 points, a little bit of an expanding channel. 1, 2, 3, so kind of like a triangle. 5 pushes. 1, 2, 3, 4, 5. Or maybe we can connect it like that. That's an overshoot. No, that's not even close. That's not good. We're not going to connect it like that. So yeah, let's get into it. Yesterday was a downtrend. We had a gap down, sell, pull back into the EMA, and we sold. Pretty straightforward downtrend. This is yesterday. And we ranged for the rest of today. Or yesterday's EOD. Today we have a gap down as well, and the first 6 bars are pretty rangy. Bulls, we have a gap down with really bad continuation for the bears. However, this gap down broke the low, broke yesterday's low, so it could be considered a breakout. Remember, because this bar, okay, that's dark. That's a gap down. However, this is not continuation. So it's a limit order market. First 6 bars a day is a limit order, and bears get the breakout with this bar being the follow through. So right now bears are in control with a gap down. Pretty, it's like a triangle kind of, lower highs like that. Minimal follow through, but then we get a good I want to say this is a low one because the downtrend pull back low and then a new low after a pullback. Low ones usually get, it's better to short a low too, so bulls get 2 legs. Let's see the next couple bars. They get continuation. Not very good continuation. So, like I said, the low one short got a quick scalp and then it reversed. Low 2 short would be, this is a low 2 short right here because the bears pull back, make a low 1, pull back and get a lower short, or excuse me, this bar. Excuse me. Yeah, so this bar is a good low 2 because it's a new low after a pullback. So there's more information and it's a worse price. A low 1 is just the first pullback with not a lot of information. Could be a leg in a trading range, and it actually turned out to be a leg in a trading range. That's confirmed right there. Bears are not getting follow through. Bulls getting a micro double bottom. Something I wanted to point out, my mentor Brad, he's been talking a lot about minor reversals versus major reversals. And something that stuck out to me is he says, when you think it's a major reversal, it's most likely going to be a minor reversal. And I've kind of kept that in my head, and it makes so much sense. Like, I really thought this was a major reversal, and then it came, I was like, wait, if I think it's a major, it's probably a minor. And you guys will see in a few seconds here that it becomes a minor, but it felt like a major, so that could be like a clue. These words are all said between his end of the day recaps or in the trader room. If you guys are not there, definitely check them out at Brook's. The channel is Al Brook's YouTube or something. It's just type in Al Brooks and you'll find them. Leg 1, leg 2, and this is the 18 bar range. I'm trying to get like really consistent with what I'm doing. So the majority of my PTs will be coming from the first 18 bars range or the first 2R. So the first 18 bars range. That's one way to find a PT. So that would be my PT. Or if it makes more sense, I would do 2R of the first 6 bars. And that gives us a little bit deeper target. So I would just have 2 up and kind of whichever one, maybe 1 here, 1 contract here, and 1 contract there. I do think this one gets met. I have really bad allergies today. Someone got pissed off at me for sniffling a couple videos ago. It's been in the back of my head now. So bears are not getting continuation at lows, and I wanted to talk a little bit real quick, rewind about the low 2, low 1 and low 2s. So here I had said this is a low 1 because of this pullback, and it is. But if you don't scalp out, it'll reverse pretty quickly. If you get short here on a stop, you gotta scalp out. And these wicks are kind of deceiving. I saw these wicks and thought the market was gonna go down. Then I saw this and I was like, we're reversing under the low. This is a micro double bottom. They get their two-legged pullback, leg one, leg two into the EMA. And bears get two gaps for today. So gap one, gap two, and now, okay, so that's the two gaps from the open, so now we know we're trending environment, and then they have another gap here. I'm gonna make these very shallow, so we can see, like, measure the bear strength together. Oh, that tripped me, that line is also red. Yeah, I don't want it to be too distracting, but I'm trying to make a point here at the end of the video. That's still pretty dark. Okay, that's light. Yeah, we'll go like 7-ish%, whatever it was. Okay, so we can see the bear gap, and the bears also have the gap down. So this is bear strength, and then they put another gap down. This gap is like that. This gap is like that. So okay, yeah, and then this gap would be from the gap down to here. There we go. We're gonna go to here, nah, because this is a gap right here. So okay, so now we have 3 bear gaps. We also have 3 flags. 1 deep pullback, 2 and 3. Third flags can fail within in a range, and this is a third flag, and it's starting to fail. Back to the low 1 and low 2s. I totally went off there. So yeah, this was a low one, and look, it snapped against us, right? And then look here, so they get their leg, they get their pullback, they get their low 1 here, and then this low, then we get another pullback, and they get a low 2 here. Both of these trades will work out eventually, and this is a low 3, so it's like a tight bear channel breakdown. Yeah, this is barbed wire, so it's so high buy low, but you have to be really fast to scalp to the long side. I would either wait for the breakout or just hold from getting short here. So low 2, low 3, and they come at a worse price with more information. And what we mean by more information is we can see bears are selling. Over here, we have less information next to a doji that could be a double bottom. So that's the price when you pay for more information, is you get a lower price. So when you get a better price entry, like let's say it was low 1 here and a low 2 at the EMA, then you could think like, this might be a trap, because why am I getting more information and a better price? That's covered in the Brook's trending. I think that's in the Brook's trending book, well, the green one. He has a lot of information out there. So bears get their 3 legs down, bear flag, 2 legs, bear flag, third legs fail, and we start to range. Also, the 2R was met, so we're going to delete that. That was a good PT. Delete this, that was the shallow PT. Got the high and the low. By middle of the day, it should be pretty clear where the high and the low is, and it was to me, so I had projected a range. Not saying we go all the way back to the range, but I like to see where the midpoint of the day is, and where the open of the day is becomes an important price for range-bound environments. I'll mark this out because I don't want it to get too confusing. This is a good reversal bar. This was the trade I posted earlier on my shorts. This bar raced down, and as it came up, I bought in hopes that it turned into a pin bar, and it did. So I was really happy that I pretty much got a risk-free trade. I was in profits right away and never retested. And the trade was to go back to the open of the day. After this double bottom within a range-bound environment, this price action right here told me bulls will be back at some point today. I don't know when, but I just knew there would be some sort of leg. I didn't plan for it to be as strong as it was, but this just told me there's trap bulls in the market. Maybe they get out here, maybe they get out here, maybe they wait for the lows and buy all the way back up. Also, the first 6 bars of the day tell us we're ranging. If right here, bulls are buying lows, so the first 6 bars a day give us a clue to what the day is going to be. And this is a limit order market, so this could be a range bound day. So that also told me buy low, sell high. Yeah, we'll leave that like that for now. I was going to add something, but that'll be the next video about ranges. So halfway of the day, midday reversal. Bulls are getting a strong breakout and continuation. And this is what I want. This is why I wanted to leave the gaps, to show you how the strength is measured. When we were in a downtrend, these gaps were telling us bears have sell orders here. There's sell orders. But now this leg gets put in, it absorbed all the sell orders. So this gap is closed. The bulls are taking out bearish market structure. Wherever the gap was, something like that. The bulls are taking out the bearish market structure. So now we're starting to reverse. For the bulls to be in a trend, however, they would have to break the high of the day, close the gap, and continue higher. I was pointing to the EMA break. So we are still in a range, but it's a bull trend within a range. Bulls continue to push up. Bulls push hard, and now they close the gap right here. There's still 2 bear gaps, but look at the damage bulls have done. This is not good for the bears today. Yesterday they were able to keep the gap open. Excuse me, I thought I was drawing. They were able to keep these gaps open. Today the gaps are getting closed. So it's a range bound environment. Buy low, sell high. This is almost the end of the day. This was a really good leg by the bulls, I think. Bears get their sell back. So bulls failed to close the gap. So the bear strength stayed open and they got overwhelmed with orders. Bulls could not absorb these. In range bound environments, gaps get closed. So these gaps stayed open, which means we have more bearish pressure. And we did have a downtrend yesterday, so that makes sense. The previous trend will influence the range a little bit. However, after 20 bars or so, the range becomes more neutral. Just as these gaps got filled on the way up, bulls were creating their own gaps as well, and that got filled on the way down. I think this was a sell vacuum test of the breakout for the bulls. We came pretty close to the low, and markets pushed back up. Markets went and found buyers, and that was the day. We had bulls get a pretty nice higher low. I think this could be a major reversal versus a minor reversal. How I spoken about Brad mentioning, when we think it's a major, it's usually a minor. And I thought this was major. I thought this was going to be major. I thought this was major, and it ended up being a minor. And it's a minor, even though this is the biggest leg today. It's still a minor because we didn't take out this bear high. So technically these bears are strong enough to push the markets back down. That was the day. Pretty nice double bottom at the bottom of a range. On the weekly chart, it's getting kind of cool for the bears. This is the 50% level of the overall range put in from October 2022 to July 2023. And I'm pointing this out because a measured move of last week's range lines pretty close. I'm kind of messing with it to make it line up better. So that's the wick. But it lines up pretty close to the 50% level. And bears so far they are getting a breakout with follow through today. But today's price action was kind of a double bottom. It could be just a pullback and we sell harder. Overnight price action right now is a little bullish inside bar, so that's not good for the bears. They would want to see continuation from today. But the overnight price action is gapped up and trying to push higher. Bears want to keep pushing the market lower and break the 50% level. Bulls want to defend that and cover themselves. I'm sure bulls got trapped here buying this candle at range lows, hoping for a double bottom bounce. And they're trapped now. Their stops are either here or they're going to buy more and average out or average their cost all the way in. On the hourly chart, the bear flag we were talking about is getting. Let me delete this. This bear flag from last week, I think, or earlier this week. Here was the bear flag. We'll push up 1, 2, 3, 4, 5. Triangle. Actually, I'm gonna triangle bear flag. There's the top. That looks way better. And then if we didn't get a leg 2, another measured move could be the range of the wedge. Maybe 2R. Maybe we extend it down here, and that lines up pretty close to the 50% level as well. 2R though. So it'll be interesting to see what we get tomorrow. It's Friday. This is definitely not good price action for the the Bears. This wick next to this bar, I don't think is good at all for them. However, we are in a downtrend, and double bottoms can be breakout trades and downtrends. Double tops sell, and double bottoms break out in downtrends. If we're in a range, this might be a buy low, sell high situation, or we might just range tomorrow. It'll be interesting to see what happens. I don't know if we have any speakers. I try not to pay too much attention to them. I just stay at the markets when we have Fed speakers. I hope you guys are learning. Thank you for leaving comments. Keep studying. I got really bad allergies today. We're wrapping up the end of the year. We got 2 months left, so study, get playbooks ready for next year, because I think a lot of us can start to make money. I think it's coming for a few of us. I had an alright day today. I still haven't had my first payout, but I am trading live money again, which is nice. I feel like whenever I blow up a live account, I get sent back to like the gulag, or like I'm wearing the dunce cap. So I'm live again with the trade copier this time, taking things a lot slower. Use your stop loss, hug someone, do something nice. It's almost Halloween. Go out trick or treating or something. Have a good one, guys. Bye.